right, welcome back to the Midweek Update. My name is Patrick Dunawilla. I'm the editor of the Chart Report. Joining me today, as always, is Steve Straza. Steve, how are you today?
Doing all right. How's it going over there?
It's going well. A lot to cover this week. So the S&P 500 holding those October lows pretty well. We're up about 2% on the week, and we ended today kind of right at that 4,600 level. I know we got a lot of data coming up tomorrow. We have that CPI print that a lot of people are waiting for. So it should be an interesting end to the week. Right here, we have a 1 hour chart of the S&P 500, just a little more zoomed in look at what we just saw. And you can see that 4,600 level. We ended like right below that today. So, we're at that key inflection point. We'll see what tomorrow and Friday bring. Interestingly, the Russell 2000 is leading nicely. It's been a while since we've seen a bid in small caps, and they're outperforming by a factor of about 2. It's up about 4% versus the S&P 500, which is up about 2%. So that's kind of a nice risk-on signal that we're kind of seeing at the index level. As you can see here, Russell 2000 kind of going up towards that. It looks like it wants to test that 210 level, the bottom end of the range that it's kind of had for the past, year now. So yeah, Steve, what are you seeing on the index level? How are you seeing if we're just talking about the stock market right now, what are you seeing? How is this week kind of unfolded for you?
Yeah, I think that's a good rundown. The real takeaways this week are, it's been a good week, right? Regardless of where you look, commodities, US stock market, I would say internationally too. We'll get there in a minute. We talked about the importance of the October lows last week and the major averages. At first, we were watching, I think, the September highs. We flushed right through there. Then we were kind of looking at the October lows. The NASDAQ 100 is well above that level now, and NASDAQ equal weight actually reclaimed it today. It doesn't have today's data. If it did, we're back above that 109 level. So it's 350, and the QQQs is really the major level we're watching. All the major averages are now back above support in the US. If you go and look at what we're seeing internationally, a lot of key levels were being flirted with. Check out the next chart. So if you look at all these, international diversified indexes, we brought along the World ex-US index and EFA. They were kind of, dancing around those 2018 highs. We really didn't, bulls did not want to see that kind of level, those levels get broken. And they haven't. So now we're seeing some nice upside follow through after we get today's data. It was a really, strong day today. There's been a lot of international damage that's been repaired, I would say, so far this week.
Yeah. Last week we talked a lot about interest rates and how, we were getting that confirmation from global yields and that the story of higher rates was really looking more and more convincing. And we're seeing rates continue higher. They went all the way up to, I think, 1.96 yesterday, which is right below that 2% level that everyone's watching. But it's starting to become like not that unique of a story anymore. Higher yields are almost consensus at this point, right? We have the Economist magazine cover right here saying, how high will interest rates go? Not will interest rates go higher? How high? It has kind of become consensus. So what do you think of that? What do you make of that? Do they need to come in the short term? Do they not need to do anything? What do you make of that?
I don't think you want to be too cute. It's the bond market. When it trends, it's going to trend. Also, a lot of this is being driven by central bank activity. That's why you're seeing it being talked about in the news more. And we had some big central bank meetings, Bank of England and the ECB. Bank of England, I think, announced the end of the taper, shrinking their balance sheet, basically everything, very hawkish. ECB recognized the fact that, they're going to have to do something about inflation, probably hike rates this year. I think they're pricing in 2 rate hikes in 2022 for the ECB. So you saw rates just break out, all over the world and all along the curve in developed Europe, really last week. So
we got UK here.
Yeah, and it wasn't even just Europe. This is truly a global thing. Look at Japan, I think, is new 5 or 6 year highs in the Japanese benchmark rate. So it's not just the US, and this is some of the best confirmation that we could get for the new highs in the US 10-year, right? Seeing the rest of the world kind of, move higher in sync with the US 10-year really bodes well for this move finally sticking and, rates moving higher from here. I think 2% is inevitable, probably get there next week. And who knows where we'll be a few months out from here.
So your point is kind of continued confirmation from those global yields, suggesting that U.S. yields will probably move higher too, and that it's a global story. Yields are moving higher together, right?
Absolutely. It is excellent confirmation for what we're seeing domestically.
Awesome. All right. So next, commodities continue to just dominate stocks and bonds. It continues. We had DBC hitting an all-time high today. We had DBA continuing to hit an all-time high today. So it's not just these energy-related commodities. Obviously, crude oil is very heavily weighted in DBC. So it makes sense that, seeing crude at multi-year highs, that you'll have DBC, the commodity ETF, at all-time highs. But it's not just crude oil and those energy-related ones. It's agricultural commodities, things like soybeans and coffee, and the list goes on and on and on. So, what are you kind of seeing there?
You make a good point, right? For a while, energy was really driving a lot of the gains in the commodity space, and that was not just true in the commodities market, the futures market, but also in the stock market. So cyclicals have been working, but it's been really mostly energy and financials. We're now starting to see other areas and groups within materials and industrials that are also very like commodity centric stocks finally join the party, right? The biggest area that we're watching is really agriculture. You got it up with DBA, but it's also the ETF MOO, which is a bunch of different agribusiness stocks, broke out to new highs today. We have some examples that we'll talk about later, but fertilizer stocks are really working. Even when you move over to like the industrial metals and base metal space, I don't think we brought along that triple pane chart, but whether it's, steel, so Alcoa, or aluminum, so like Alcoa, a steel stock, like maybe Tech Resources, they're kind of like copper, zinc, and coal actually, or Arch Coal, they're all breaking out to new, fresh highs out of these really nice bases. So it's no longer just energy stocks confirming the strength in the commodities market. We're seeing everything else that should be start working as well.
Yeah, the way you kind of explained it to me earlier was basically we're seeing breadth expansion within commodities. And I brought along this tweet from Lizanne Saunders, basically speaking to that point. You have this broadening out of commodities. It's not just a handful. We have some of the ones here. Coffee, all-time high this week. Or no, I'm sorry, not all-time high, but multi-year high. The highest since what? 2014, 2011.
Really nice base breakout. Cotton, soybeans, across the board.
All across the board.
And like you said, so participation has been broadening within the commodities market for a while now. It's starting to broaden more. It wasn't just energy. That's not fair to say. Agriculture has been strong. I think agriculture actually outperformed energy in the fourth quarter, if I'm not mistaken. But now you're really getting that confirmation in a sense that you're seeing the strength broaden into the stock market and other areas of the stock market besides just energy stocks, which had been the case for a while.
Yeah, that's a good point. And this ETF here that we have up, MOO, that's, it's not like DBA in the sense that DBA holds a bunch of agricultural commodities, right? Like the actual futures contracts.
That's right.
MOO holds agricultural related stocks, right? Companies.
Yeah, you want me to name some?
Yeah, go ahead.
They're some of the largest stocks in this ETF are John Deere, Zoetis, IDEX Labs. I think that's like pet medicine. Archer Daniels Midland, Nutrien, which is Old Potash, that's a fertilizer stock. Corteva, Tyson Chicken, Tractor Supply Co. What you would expect in the agribusiness ETF.
So, Steve, last week you brought on Chevron. I brought Raytheon. Both are doing well this week. What did you bring on for us this week?
So, sticking to the same theme that we've been talking about, let's hang out in the agricultural space. Corteva, this is one of the largest agricultural input stocks, really just a fertilizer company. Them and Nutrien are the two largest in that industry group. They pay like a 1% yield. They were actually the agricultural division of Dow DuPont, and they were spun off in like 2019. And it's just a really nice chart. This is a super clean chart. Nice base that was built out in 2019, 2020, broke out. Saw a nice up leg into early 2021. Now we've really gone sideways since April, May of last year, building out another nice base, a little launch pad, kind of digesting the gains. And now I think the stock probably has the right pent up energy to make another up leg similar to the one that we saw out of the 2020 base.
Yeah. What I really like about this one too is, not many people have heard of this name. You said it was a spinoff of Dow DuPont. Looks like it's only been public for what, less than 2 years or so, right?
Summer of 2019, I believe.
Yeah, there you go. So I love when you see a fresh name that not many people are watching breaking out like that. That one's great.
Yeah, Sean wrote about it today. Put an options trade on it. You can read it at All Star Charts.
Oh, nice. All right. Well, I brought John Deere for you. It's you mentioned Moo earlier. This is the largest component within Moo. I like it as long as it's above 400. You have that solid base that's formed over the past 8 to 10 months. Above 400, I think it can go to 570, which is the next major Fibonacci level from that the 2020 decline. So yeah.
And one thing to point out is all these charts look the same. Corteva, Deere, Moo, they all had nice up legs into the first half of last year and have been kind of consolidating, moving sideways since. And now they're pressing back above those first half highs from last year, look to be resolving higher. And they're giving us a really nice, well-defined place to trade against at those former highs.
Yeah, no, that's an excellent point as well. Well, Steve, thank you so much for joining us and sharing your thoughts. And we look forward to talking to you next week.
All right. This was fun. Talk to you then.
Awesome.